What's up, my fellow harmonic traders? Welcome back to Track the Harmonic, where we dive deep into the world of harmonic technical analysis. I'm your host, Lord MC, and in today's video, we're gearing up for an action-packed week ahead of us as we unravel the mysteries of harmonic technical analysis and set our sights on some crucial economic indicators, as well as continuations of earnings release. But first, let's take a quick peek at what's on the horizon. Next week, we get ready for a roller coaster of insights as we closely watch the release of key economic data. We have the retail sales month over month, which is an indicator that provides information about the changes in retail sales from one month to the next. It measures the percentage change in total value of sales at the retail level, including various types of goods and services purchased by consumers. This indicator is essential for understanding consumer spending patterns, which are a crucial component of overall economic activity. Higher retail sales month-over-month values indicate increased consumer spending, which can contribute to economic growth, while lower values suggest reduced consumer spending and potential economic contraction. We also have the buildings permits preliminary, which refers to the preliminary data on the number of building permits issued for a new construction project. So a building permit is an official authorization granted by a government agency that allows the construction or renovation of a building or structure. So the preliminary building permits data gives insights into the intentions of builders and developers to initiate construction projects in the near future. It can be a very early indicator of construction activity and can provide information about the health of the construction sector, which is closely tied to economic growth. Next, we have the Federal Open Market Committee, better known as the FOMC. We have the minutes that provide a summary of the discussions, decisions, and outlook of the FOMC meetings. The FOMC is a key component of the U.S. Federal Reserve, responsible for making monetary policy decisions. The minute offers insights into central bank's assessment of economic conditions, inflation, employment, and other factors influencing its policy decisions, including interest rate changes and other monetary policy tools. Market participants and economists closely analyze the FOMC minutes to gauge the Fed's stance on monetary policy and to anticipate potential future actions. And last but not least, we have the Philadelphia Fed Manufacturing Index, also known as the Philly Fed Index, which is a regional economic indicator that measures changes in business growth within the 3rd Federal District, covering Pennsylvania, New Jersey, and Delaware. So it collects data from manufacturers regarding various aspects of their business activity, such as employment, new and unfilled orders, shipments, inventories, and prices paid and received. When the index is above 0, it signifies growth in the factory sector, which below 0 indicates a contraction. So the Philly Fed Index provides insights into the regional manufacturing conditions and can serve as an early indicator of broader economic trends. These indicators collectively offer value insights into different aspects of the economy, including consumer spending, construction activity, monetary policy considerations, and regional manufacturing health. So analyzing these indicators helps economists, policymakers, and market participants to make informed decisions and predictions about economic trends and potential market movements. So if you like this type of content, please consider turning on the notifications and subscribing to the channel so you don't miss out on future videos. I also want to preface by saying I am not a financial advisor, and none of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. So having said that, let's get right into the charts. So first up here is SPY. SPY had a very interesting week. It did close on Friday as high as 446.70. The low was 443.35 before closing the day at 445.65. So what can we expect here harmonically? On the one-day chart, you do have a bearish crab pattern where you did lose the 21 EMA here, and you do have a 921 crossover to the downside. You did lose hop here, so the next level, should you not find support here off the 50 EMA here, is that XA at 436.31. I'm going to bring up my drawings here. I have a very key level here for the SPY here. Should it fail to hold this level at 443.75, I do think you're going to come down to XA at 436.31 and then potentially fill that gap all the way down to 422 and change, 423 and change, and then complete the type 1 reaction for this crab at target 1 of 419.74 to test the 200 EMA there. So this is a very key level here for the SPY to hold. If it doesn't, I do think there's more downside. On the weekly, you did generate an HSI dot last week, and we do have a average selling pressure as well. So right now it did test the 9 EMA. So losing that level, you have the 13 EMA there at 439, call it 440, and then target 2 at 433, which is relatively close to the daily here at 436. On the weekly, if I go back here, you can see that the HSI crossed the midline. So if it does reach the oversold conditions, this could probably go down all the way down to target 2 and below. So definitely keep an eye out on the SPY here. One thing I do want to note is that right now the HSI is kind of hovering just above the oversold condition. So if it doesn't hold this level, you could see that XA, and then in the losing that level, you could see a 419.74. For the bullish case scenario, in order for SPY to continue pushing up here, it does need to find support here, and it needs to claim 446.83. If it can reclaim 446.83, the next level I'd be looking at would be right at above the 21 EMA here at 448, up at 451, and then maybe reclaim an important level there at 453.67, fill that gap all the way up to 455, and then test 465. So this week is going to be very important for the SPY. If we do lose the 50 EMA or SMA here, I do think there's more downside incoming for the market. So keep an eye on the SPY here. Jumping over to the triple Qs. So the triple Q is similar setup to SPY here. It did lose a 50, and it's on an indecision candle here on this doji. You did close just slightly above the 50 EMA here. So what can we expect here off of this bearish bat pattern? So you did generate an HSI dot back here last week, and you're now, what is 1, 2, 3, 4, 5, 6, 7, about 7 days below the 21 EMA, where you did get a 921 crossover to the downside. You obviously retested the 21 a couple of times here, but you failed to reclaim that level and are now coming to the downside here. Should you not be able to hold the 50 EMA here, the next level I'd be looking at would be hop here at 361.07. Losing that, and you got a downwards pressure here all the way down to XA harmonically to 337. There is a gap down here at 333 and change. You could test the 200 EMA right around 331. BC at 326, and you calling this bat pattern is calling for a type 1 reaction potentially all the way down to target 1 at 306.43. If we go over to the weekly here, the weekly you did generate this bat pattern, where last week you did generate an HSI dot, and now you have average volume, selling volume. So it did lose a 9 EMA here, so continuation below that, support here at 361, which is, I believe, right there next to that hop level. So that hop level is very important. Should it not hold and lose, you will come back down and potentially start this type 1 reaction to target 1 here at 327.55. You could bounce from target 1 here at 327.55 and then start doing a type 2 return back to potentially hop there. So we will definitely keep an eye out on the triple Qs. The HSI did lose the midline, and it's potentially coming down to that oversold region, which could, in my opinion, test that target 1 there before if potentially prints out a reversal candle back up to the upside. So triple Qs, we'll keep an eye out on that because it's really at a key level here. Jumping over to the Dow Jones. The Dow Jones on Friday is still holding above the 21 EMA here. So you did have a lower volume to the buy side on Friday, but it did manage to close above the 9 EMA here. The HSI looked like it did generate an HSI arrow here after it was oversold, and is now potentially coming to test that midline. So what can we expect here to the upside if there's more continuation for the Dow Jones? The next level I'd be looking to see if it can break up above that is the 357.74. You got a gap fill all the way up to 359 and change, 360 call it, and then there's a level there around 362. If we go over to the weekly, there's no current harmonic pattern here, but as you can see here, it's very relatively close to a potential all-time high still. So this 357.74 is a very important level for the Dow Jones here. Let me see, I think I saw another pattern here. No, I didn't. So to the downside, if Dow Jones is not able to hold 21 EMA, a lot of the blue chips and a lot of stocks right now are coming down to test their 50 EMA. So if the Dow Jones does not hold above the 21 EMA, the next level I'd be looking here would be 347, the 50 EMA here, which is around 346, and also right there just slightly above the SMA here, the 50 SMA. And a key important level would be losing 343.09, which you could come back down for a type 1 reaction to price target 1 here at $330.96. So we'll see if the Dow Jones continues pushing upwards next week. Jumping over to IWM here. So IWM does have this white swan pattern as well as the bearish bat pattern, where similar levels here. You did close below the 21 EMA, so you're now 1, 2, 3, 4 days in a row below the 21 EMA, and it's coming to test that 50 EMA there. Remove this gap here that it did fill. So what can we expect here? You do have a potential 921 crossover in the daily, so if you manage to not break above this level, the next level I'd be looking, if you lose a 50, would be 187 or 186 here at target 1. Maybe you test the 200 EMA at 184, and you could go all the way down to complete the type 1 reaction off the bearish bat pattern all the way down to 178.99. Right now the HSI is a bit oversold, so you could bounce off of the 50 here, maybe print in a reversal candle, which could signal a potential move back up. If you manage to get the volume to the upside, the next level it needs to hold above is ABCD here at 192, reclaim the 13 EMA at around 193, get above XA at 195.63, and then you see 198.75. Above that you have hop there around 200 and almost $203. So very interesting to see if IWM is going to find support here off the weekly. You did generate an HSI, 2 HSI dots in a row with average selling pressure, so you do have you did test the 9 EMA there, so it's going to be interesting to see if it holds this area for the IWM. So the next ticker I want to cover here is XLF. So XLF here did manage to lose a 21 EMA here, but it found support and it did reclaim that level. You do have this bearish bat pattern where you did start looking like you're coming back down here for a type 1 reaction to 33.68. Should you fail to get above the 9 EMA and you come back down, like I said, a lot of things are testing their 50 EMAs. The next level I'd be looking at would be 34.28. Fail that, you can come back down to the 200 EMA at 30, call it 34, 33.91, 33.68. Below that, you obviously have target 2 to complete the type 1 reaction to 32.42, and then you have that gap fill. What's interesting here right now is that you have the SMAs here for a golden cross. So if it manages to find support above the 21 EMA and reclaim the 9 around $35, the next level it needs to break above here is 35.58. Breaking above that, you could see potentially hop at 37.07. So definitely keep an eye out on XLF. Jumping over to the energy sector, which has had a hell of a week here. So it does have this bearish bat pattern where you did reclaim XA here and you went to hop here at 89.36. You closed on Friday at 89.90. So what can we expect here for XLE? The HSI is yet to be overbought, so the next level I'd be looking at, the RSI is a bit overextended here, so the next level I'd be looking at would be $91.11, which is the OPR off of this bearish black swan pattern. The HSI, like I said, is yet to be overbought, so this thing can continue pushing. And if we jump over to the weekly, you have hop there, XA at 90.56, break above that $91 range. I would be looking to see if it tests 94, a break above that, and you can see hop at 108.63. Right now the HSI off of the weekly is a bit, you're almost going to generate a potential HSI arrow to the downside to see if you get it, but the volume the past 5 weeks has been significant there with average buying pressure, so this looks kind of bullish right now for the energy sector. So should it not continue pushing up here, the next level you'd be looking to retest would be 89.36. Fail that, you can come back down to 86.43 and then complete the type 1 reaction. You could have two scenarios play out here. You don't find support here, you just come back down to test 82.65, which is a key level there that I have from a previous harmonic target. If you come back down, you could bounce and then push up even higher. So definitely keep an eye out on XLE. Jumping over to Apple here. So Apple on the daily did generate a new bullish harmonic shark pattern here on, I believe it's Wednesday, August the 9th. So Apple obviously looks very bearish right now. You obviously had an increase in selling pressure here where you did lose some key levels here. Harmonically, you lost 182.94 and you came down all the way down on Friday to test the low there at 176.55 before closing the day at 177.79. You still have not entered that gap. That gap gets filled there to the downside at 175.77. So you're slightly closed above the terminal bar here with an HSI dot, as the RSI is a bit oversold, and the HSI as well as the AMP RSI. So what can we expect here for Apple? Should you find a reversal candle, this is an indecision candle in my opinion. If you have more buying pressure come up here, you could retest that 182.94 level and maybe get above 184 and then target 1 at 187 and then maybe fill the gap all the way up to 191 and target 2 where there's another gap. Should it you not there is a dividend there was a dividend date on Friday, so we're going to see the effects potentially next week of that. If it does not manage to hold a terminal bar here, and you get the RSI to reset as well as the HSI and the AMP RSI, you get maybe some support here up to the upside and then come back and create a lower low. The next level I'd be looking at is to fill that gap. Then there's OB here at 174.60 and then hop at 171.63, where you could come down here to test the 200 EMA at 168 and fill that gap right at 167.04. In my opinion, if you come and lose this level at 166.25, it can get very bearish for Apple. So it might be you did obviously lose the 921 to the downside, and you come here right now. You're approaching with the 920, the 2050 crossover to the downside. So, like I said, some of these blue chips have tested their 50, but Apple did lose its 50 here with increase in selling pressure. So we will definitely see if there's more downside here for Apple, or it finds some type of support here this week. On the weekly, if we jump over here real quick, you do see that it was an increase in selling pressure, but the spread of the candle is a bit smaller than the previous, but you did generate an HSI dot. You did manage to lose a 21 EMA, but you managed to close just, I believe, just slightly above, just slightly below it actually. So the next level here with the EMAs would be that 50 EMA weekly, which is at 166.25. So we will definitely keep an eye out on Apple, because the HSI on the weekly has a little bit more room to the downside, which could test that 166.25 potentially. So we will see what happens with Apple. Jumping over to Microsoft here. So Microsoft has closed just about 1, 2, 3, 4, 5, 6, 7, 8 days in a row below the 50 EMA here. It did get a 921 crossover and is now approaching, similar to what Apple is doing, a 2050 crossover to the downside. So right now the HSI still has room to the downside. If it doesn't find support here at the entrance of this gap, I do think you might fill it here, which is right around 316. Losing that, you have XA at 304.26, the 200 EMA there at 298, BC at 292, where there's another gap all the way down to around 281.60, which is right at the 200 SMA, that close of the gap. And then you have the type 1 reaction all the way to target 1 at 272.45. So if it doesn't manage to reclaim these levels here, Microsoft does have a little bit more of downside incoming for it, as well as a dividend date on August the 16th. So in order for Microsoft to continue finding support, it does need to reclaim a few levels here. My opinion, needs to get above the 50 EMA here at 330, kind of where Hop is, and see if it can test 349, which is a key level there for Microsoft. On the weekly, we jump over, we have 4 weeks in a row. Obviously the selling pressure is decreasing, but it's 4 weeks in a row of selling pressure for Microsoft here. So you did lose a 13 EMA. The next level would be the 21 EMA here at 317. Losing that, obviously you come back down and Hop here at 297 and below. So very interested to see if Microsoft finds support here. Otherwise, more downside, I do think, at least for Microsoft and Apple. If it doesn't find support, the next level, when it comes to at least the moving averages, would be the 200 EMA there. So we'll definitely keep an eye out on Microsoft. Jumping over to Amazon. So Amazon on the daily does have a bearish bat pattern, where it did enter the gap now, and the next level I'd be looking at here to the downside for Microsoft, if it doesn't manage to hold a 90 EMA, would be $134, BC at 120, 130, call it, which is where that gap gets filled. And like I've said, some of these blue chips have been losing their 21 EMA and are now testing their 50. So this could potentially be where Amazon might go to. I'm not saying it will, but from the looks of it right now, you are finding some support just above the 90 EMA. So if you continue getting some buying pressure for Amazon, the next level I'd be looking for Amazon to claim there is at 139.41, which is XA. Claim 143.63 with the terminal bar, and then you can maybe see Hop at 155. Otherwise, you lose a 21 EMA, you're going to see 130 where that 50 SMA is at. Obviously, losing that level, you complete the type 1 reaction all the way to target 1 at 119.87. The HSI is about to test the midline, so I do think if it goes to that oversold region, I do think that's around target 1, where you could have a situation where you do something like this, you come back down to target 1, and then a potential return back up to hop there. So we'll see if that is the case with Amazon. On the weekly, if we just really quickly go to the weekly, you do have decrease in volume pressure, but as you can tell, this just did generate a bearish bat pattern last week, and you did lose XA there at 139.14. The next level would be BC, which is at 130, and then you complete the type 1 reaction at 119.87 on the weekly. You did lose the HSI midline there, so we will see if there is more downside on Amazon there. Jumping over to Tesla here. So Tesla did enter the gap on Friday. Right now the HSI is kind of finding some type of support, flatlining here, so looks like it still does not want to fill that gap, but if it decides to have some more downwards pressure here, I'd be looking at Tesla to fill that gap around 235, and then to complete the type 1 reaction to 223.85. Similar situation where you could have something like come here and then push back up to potential all the way up to hop back to 343.69 there. So the HSI still has some room to the downside before it generates a potential HSI arrow, which could take it to 223.85, right close to the 200 EMA. In my opinion, if you lose this level, becomes very bearish for Tesla, and you could come back down all the way to 177.25 to complete the type 1 reaction all the way to target 2. But I do think you'll have a lot of support here at 223.85 if it decides to go there, which would test the 200 EMA. So like Microsoft and Apple, who have lost the 50, Tesla has 2, and the next level when it comes to the moving averages would be the 200 EMA there. So to the upside, in order for it to be bullish again, I would like it to close above 253.80, which is a very key level to lose. Should you reclaim 253.80, you can see 263.08, 276, fill that gap at 290, and maybe go on its way all the way up to hop at 343.69. Off of the weekly, you have 2 weeks in a row, and this is increased selling pressure. You do have this bearish bat pattern where you generated an HSI arrow at the completion of point D, and target 1 is 223.85 to complete that type 1 reaction. The HSI is about to, if it reaches that oversold area, that is potentially at that 223.85, which could generate a potential reversal candle back all the way up to hop at 343.69. So keep an eye on Tesla. Jumping over to Google. So Google on the daily chart did generate an HSI dot on Thursday. You did manage to close just slightly below, I believe, the 90 EMA there. If I just zoom in a little bit here. Yeah, you kind of closed just slightly above it. So the next level I'd be looking here for Google off of this bearish bat pattern would be if there's some downside pressure here, to fill that gap right above 123.15, which is kind of close to that 50 EMA there. Losing that level, you got 118.98. You got another gap fill right where the 200 EMA is to complete the type 1 reaction below that is at target 1 at 111.58. There's still some more downside on the HSI, so you could see maybe the test or that gap fill the next level before maybe it finds a reversal candle. Should it claim back with strength above the 90 EMA there, the next level I'd be looking at is hop at 138.18. If we jump over to the weekly you left on a decrease in buying pressure here with an indecision candle. In my opinion there, you almost have that inverted hammer candle there. So target 2 is at 125.49. Losing that, you obviously have these levels here at 109.39. I don't know that that Google goes down there, but anything is possible. Right now you're actually on the weekly about to cross the midline, so this is very important to see if it actually goes right through it or it gets rejected and you have some downwards pressure on Google. But right now Google is kind of holding pretty strong here compared to some of the blue chips, so we'll keep an eye out on Google. Jumping over to Meta. So Meta here on Friday did finally fill this gap, or remove this gap here. So the last time Meta has tested the 21 EMA, has found support and reclaimed and continued to make higher highs. Right now you're obviously having some average selling pressure here, so the next level, if it doesn't reclaim above the 21, is I'd be looking at that 50. The last time it tested that 50 EMA weekly was back here in January. So to the downside, I'd be expecting, if it doesn't hold here, $290.84. losing that, obviously you got all that downward pressure potentially to that 200 EMA where there's that other gap there. So right now the HSI midline, the HSI still has some room to the downside, which you could find a potential support or a reversal candle at that 50 EMA. If we go to the weekly, you can see that it's still kind of a bullish here to just reclaim target 2, where it did close just slightly below it, which maybe you come down and test that 90 EMA. Obviously you still have the continuation here, potential golden cross on the SMAs here, the yellow being the 50 and the 200 being this red line here. So obviously that'll take some time if there's more bullish pressure, but right now you at least did reset the RSI as you were overextended on the weekly. You did cross below that HSI midline, so we'll see if this doesn't hold off of this $300 level. You could come back down all the way to the 250s, which is right above the 200 EMA. So we'll see if there is more downward pressure for Meta. Jumping over to NVIDIA. So NVIDIA had a very bearish week here. You did manage to close on Friday at 408.55, losing the 50 EMA. You finally got the 921 crossover, and you finally lost the 21 EMA for NVIDIA here, because the last time it tested below the 21 EMA was all the way back here in January. So what can we expect here for NVIDIA? Should you not find support here, the next level I'd be looking is to fill this gap just slightly above 395.30. Obviously, like I said, like Apple, Microsoft, and Tesla, it obviously lost the 50, and the next moving average it would test would potentially be here all the way down to the 200 EMA at 310. In my opinion, losing this 411.30, which is the previous harmonic target, is a bit concerning here for NVIDIA. If it doesn't stay above this level, I do see potential of it filling this gap here and then coming down all the way to 366, then 346, filling all this gap here, going below hop, and then testing that 200 EMA there, where you kind of close that gap. On the weekly, you can see that you had increase in selling pressure. So it did lose a 90 EMA. It found support off 13. The 21 EMA is at 371. So there's going to be, I believe, a fight there just around that psychological level at the $400 range. The HSI, it is a bit oversold, so you could find some support. Maybe that reversal candle comes at the entrance of this gap, which is around 396, and then reclaims back above. In order for NVIDIA to be bullish again, you do need to reclaim 419.38, get above the 21 here at 440, fill this gap at 460, and then maybe test 493.76. So we'll definitely keep an eye out on NVIDIA. Jumping over to Netflix. So Netflix, on the daily, you do have this ABCD pattern where it looks like it's forming a potential head and shoulders pattern where the neckline is at that ABCD here at 412.67. You did have 4 days in a row of average selling pressure. You did cross the HSI midline. So if you do manage, right now, like I've said, some of these tickers have tested their 50 EMA, and Netflix is a good example of that. So if it doesn't find support, the next level I'd be looking at is to test ABCD here at 412.67, where that neckline is, and obviously playing that head and shoulders could potentially come down all the way to fill this gap around 383, 384. Test the 200 EMA at 365 and complete the type 1 reaction all the way to 352.06, which could potentially get that HSI arrow to the upside, in which case you could come back for a type 2 return all the way to hop back up to 430, and then maybe fill this gap down the line at $506 and change. On the weekly, you did generate an HSI dot. You did manage to close just slightly above the 90 EMA, so if it doesn't hold this level, then I do see this potentially going down to test these levels here harmonically on the daily. Last but not least, we'll go over to Bitcoin here. So Bitcoin did test 30,000 in the week, and it's obviously still finding some rejection here off the 50 EMA, the 50 SMA, and right now as of Sunday, we are losing the 50 EMA here. So it's still, in my opinion, very choppy here for crypto and Bitcoin in general, crypto in general, where you're waiting for a potential breakout to the upside or to the downside. To the downside, if there is a breakdown, you would be looking at 28.1. You can complete the type 1 reaction. Right now the HSI is testing that midline. If you do fail that, you could potentially go all the way down to 200 EMA there at 27.2, and then for the most bearish case, they're at 25.56. 25k, 25.5k, maybe find a reversal candle and come back up to the upside. If you do manage to hold that midline, the next level I'd be looking at is at 30k. 30k is very strong level here, as it's been rejected a couple of times off of these wicks, which is at 86 at OB off of this bearish shark pattern at 30,200. So a break above that, you want to break above terminal at 30,800, and then test hop 31.8k there above hop. You could potentially see OPR at 32.k, and above 32.k there's in the 40s, 50s. So right now it's just too much chop in my opinion on Bitcoin and crypto in general. It's just getting very tight, as you can see. I believe if we turn on the Bollinger Bands, it's continuing to be very tight here. So an explosive move, in my opinion, is incoming. Just when that's going to happen, who knows. My opinion, I'm just going to be waiting for that breakout and then play the momentum there. On the weekly, we do have just more indecision candles here, so very, very low volume right now. So obviously an indication of low volume indicates that it's a consolidation or just waiting for a breakout of a potential upside or downside movement. So that's all I have to share with you guys. I will be streaming Monday, same time as always, 15 minutes before the bell. So if you're interested in joining me for that, the link to my Twitch is in the description box below. So having said that, I hope you guys have a good rest of your Sunday, and I will see you guys tomorrow. Take care, everybody, and peace.